Friday, July 15th, 2022, Monaco 64, home of alternative economics and contrarian views. So Italy and Japan seem to be the epicenter of a possible perfect financial storm. And this is a term used by a mainstream Italian magazine that I bought yesterday at the airport in Milan. And it looks as well that the world is going into recession. And that, of course, is probably the main reason why we're going to have the perfect financial storm. We're going to look at some data that have come out overnight from China about that. We're going to talk about Italy and Japan and why I think they're going to be the epicenter of the crisis. Before I start, though, I like to say yes, my wife and I had a really nice trip. It wasn't a long trip to Italy. We got there on Sunday, late on Sunday, and we left yesterday morning. You probably noticed I didn't do a video yesterday. We were traveling most of the day. We had to travel from Lake Garda. We drove to Milan. We dropped the rental car at the airport, and our flight wasn't until later. We were lucky to get a cab from the airport in Milan into the center of Milan to have a walk around because they had a strike, a cab strike or taxi strike in Milan. But one nice lady taxi driver picked us up. Her excuse was that we were elderly because they were picking up elderly people, children, and disabled people. I didn't want to argue about my age with her. I just wanted to get into Milan. But on the way back, it was very hard. We actually had to call an Uber, which was quite expensive, more expensive than you'd pay for a cab. And that's the reason why they're on strike. Apparently, there was some leaks that came out from an ex-Uber executive that talks about how Uber has been paying a lot of bribes to politicians around the world. And that's why the Italian taxi drivers are on strike. So there you go. Our supposed leaders making things even worse. But yeah, so I didn't have time to do a video really. And it was hard. We're walking around Milan, and then we went to the airport, and a lot of people in the airport. One thing I noticed, a lot more people in Italy wearing that thing. Some people were even wearing two. I just find it quite, I mean, it's their business, of course, but I don't know. I think a lot of people are scared still, which is a shame. But back to the topic. I will speak a little bit more about what we did there, probably later on today or even this weekend. Later on today, I'm going to be on the Mike and Mario show, which I'll publish tomorrow morning, of course. So as you can see, Billy is doing well. He's a little hot. I think it's going to be a hot day here. It was quite hot in Italy as well. He was well looked after. As you can see, we've been for a walk already. So Billy's ready for ready for more action, and we're ready for business, right, Billy? Anyway, so I bought this at the airport. I thought I might read something about what's going on in Italy, and the title is "What if he doesn't do it?" You know, they talk about in the article that he's Mr. Whatever It Takes, and the article asks the questions, and whatever it takes is a reference to when he was ECB president, and that's Mario Draghi, of course. He's the Prime Minister of Italy. Unelected, of course. He's a caretaker. He's an ex-Goldman Sachs executive, ex-ECB president. And about 10 years ago, he kicked the can down the road. We had a sovereign debt crisis, which I think is highly probable this summer. And I've been speaking about that in the last month or so. And Italy, Portugal, Ireland, Greece, and Spain, they were all going bankrupt. Their bond yields are going through the roof. i.e. people were selling their bonds, and Mario Draghi had to come out as ECB president and promise the markets that the ECB would do anything to stop that, i.e. they would print money and buy those bonds. And he's succeeded up until now, and I think he's an important cog in the wheel, or in the whole mechanism of not just Italian debt, but the EU debt, world debt. Because if Italy goes, I think everything goes, and Japan seems to be going as well. Japanese currency continues to melt down. We're almost at 140. Remember, about 2 months ago, they're saying if we got to 130, the Japanese would maybe intervene to hold the yen hold the yen up a little bit and stop the dollar from rising so much against the yen, or stop the yen from falling too hard. And why is this a problem? Well, because it could create an inflationary, and it is already an inflationary environment in Japan. And this is what it says here. So I'm going to translate. The recession is arriving. So Italy is in a recession, or is coming very soon. High energy prices, the unsustainable public debt, and that is the whole problem. And it says Mario Draghi, he faces a tough financial law. That's the budget that's supposed to be passed by September. And yesterday I bought this, I started reading, and then when we got on the plane, I still had my phone on, and I got a message, like it pops up from the FT on my iPhone, and it said Draghi presents resignation, but President of Italy did not accept. So while I was reading this, he basically went to resign because the biggest party that is in his alliance did not approve a budget. And they want to pass a budget, I think, to help Italians fight the cost of living crisis. So they're trying to give out 26 billion euros, more of what everyone seems to try to be doing, create more debt and more money to fight inflation. And he said, I can't keep going because the biggest coalition party in the coalition has, really, I can't work with them anymore. But the Italian president told him, no, I don't accept your resignation. You need to go to Parliament tomorrow, being today, and try to get more support. So yes, Italian yields have backed off quite a bit from earlier this year, but I don't think we are out of the woods. And I've been saying this, that I had a feeling that this summer is going to be a very tough summer for the bond markets worldwide. And by that I mean I think yields are going to spike, and they're going to start in Italy and the other PIGS countries, PIIGS, Portugal, Italy, Ireland, Greece, and Spain. I think Ireland, their situation has improved a lot in the last 10 years, so it could be just PIGS. But why is it important for the whole world financial system? Well, as you saw, I think we've had really bad results per JP Morgan. It affects all the major too big to fail banks. And so, yeah, it says here, his government is very fragile. And I was reading that, and lo and behold, an hour or two later, he asks to resign. And it says, the risk for Italy is of a perfect financial storm, that it could become a reality. So this is not me being hyperbolic or anything, or dramatic. And I think Japan is in the same boat. And Italy, if it still had the lira would be doing what the yen is doing now, melting down. So that's why the bond market is important. The only way, really, the financial markets can punish Italy and give a signal that all is not well with Italy is not through the currency, even though the euro has dropped quite a bit. it's through the bond market, through selling BTPs. And it's really amazing that the ECB still has rates negative with inflation running almost at double digits. And yeah, they're in a really tough situation between a rock and a hard place, the ECB. They might have to, make an excuse and start buying Italian bonds. It's a huge mess, I think, and the public debt is what it's all about, because if you look at the U.S. debt clock and you go to the world debt clock, you can see that Japan public debt to GDP is at 286%. Italy, it's at 175.5%. And apparently the debt there is growing massively. 18 billion euros every month, the national debt is growing. And their budget deficit is running at 9% of GDP, which is really unacceptable, because when the euro was created, prior to it being formed, one of the rules was that the budget deficit to GDP could not be more than 3%. And here you have Italy running a 9% deficit. And I think it's going to get worse, not just for Italy, for every country, because as the recession kicks in, it's going to get pretty bad. And right now, the strength of the dollar, which is more by default than anything, it is pointing to a big crisis, liquidity crisis. And I don't think they can hold things together up until next year. Before this year is out, I think the proverbial, I don't want to say the word, will hit the fan. And I think we're pretty close to it. And that's why I'm not concerned at all about the price of gold and silver, because they're real money. And people need to how can I say, realize that they shouldn't be worried about the fiat price of gold and silver. I think you'll be sorry that you didn't have any when everything unravels and we get to the other side of whatever this crisis is going to be. And we're seeing as well, even China. I remember the day when China GDP was growing at 6-7%. It was like clockwork. But we had some data overnight. GDP in China, it was expected to grow at 1% only year on year in the second quarter. Only grew by 0.4%. And in the second quarter of this year, it dropped by 2.6%. Yes, it was expected to drop, but only by 1.5%. So even China's slowing down, Italy's slowing down. The U.S. is going to slow down. I noticed the yield curve is inverting even more in the U.S. Let's see, the 2-year right now is at 310 almost, and the 10 years at 292. So almost 18 basis points. This is, I remember in 2019 when it inverted, it wasn't that much and it wasn't for that long, but this is becoming really a sign that something's going to happen. And yes, the CPI was very strong the other day in the US, 9.1. A lot of people were expect a rate hike of 1% by the FOMC at the end of the month. But yesterday, some Fed presidents backtracked. They said talking about 1% is too much. Personally, I think the Fed is foobarred. It's the term used during World War II. And because it's too late, they should have been raising rates maybe 10 years ago. They should have started and stuck to it. We should be now normalized at 4, 5, 6%. We should have been for a decade. They push this propaganda that the neutral rate is around 2.5%, which is rubbish, and they're still pushing it. How can they push that with CPI running at 9.1? running almost at 19% if you measure it like Shadow Stats does using the 1980 methodology. So when people realize that the Fed has really lost the battle, well, not really lost the battle. I think they've done what they want to. They want to destroy the currency because that's the only way to pay off the debt. Yeah, there will be a rush to hard assets, gold and silver, of course, included. They will be the most important ones because when money dies, when currencies die, and I should say really when fiat currencies die, the only thing left is real money. The reason why I said when money dies is that there's that book about the Weimar hyperinflation. It's called When Money Dies. I guess the author didn't really know the exact difference between real money and currency. And that's where we are. And yes, it's frustrating seeing the fiat price of precious metals get hammered. But I don't think it means anything. It doesn't mean that gold and silver are no good anymore. They've been good for thousands of years, and they're going to be good for the next few thousand years, I would say. Of course, we're not going to be around, but yeah, I don't see any way out, and I don't think they're going to be able to keep kicking the can down the road for another 6 months. So it's going to unravel very soon, I have a feeling. So with that, let's quickly look at where the markets are this morning. It's 8:09 a.m. London time. We got spot gold at $17.05. It's down $4. High's been $17.17. The low has been $1,700 exactly. Spot silver is down 18 cents or 1% at $18.21. High's been $18.49 and the low $18.17. Dow future is down 84. The Nasdaq is down 20, and the S&P 500 is down 10 points. I saw yesterday the market rebounded because I think it was Waller, the Fed president, kind of tried to tell the market, you guys are, expecting too much from us at the end of the month. 1% is too much. And actually the expectations dropped for a 1% rate hike from 80 to 40% only. So let's look at the currencies. The pound is unchanged, 118.15. The euro is down slightly, just above 1. So the euro is still buying $1 for now. The dollar is down a 0.25% versus the yen, 138.58. The high's been 139. I think 140 is just a matter of time. And the higher that number goes, it means the weaker the yen is, of course. Dollar is down slightly versus the Swiss franc, 98.26. Dollar is up 0.33% versus the yuan at 6.78. I guess those GDP numbers didn't help the yuan. And let's have a look at the Russian ruble. Yeah, the dollar is up 1% at 58.80, but the ruble is still relatively strong, I would say. To the general commodities, WTI crude is down 0.75%, 92.50. Brent is down 0.4 at 96.50. High-grade copper, again, pointing to a recession. That's what it does. Copper is a very good indicator of that. It's down 2.2% at 314. U.S. nat gas, on the other hand, is up 1.6%, 663. Just have a quick look at the European natural gas, the Dutch contract. Have a look. Where is it? Yeah, that's still relatively high. The price that is, it's at 175. Prior to COVID, this nat gas contract traded below 15 euros, so it's 10 times more expensive. So before I finish, just a quick comment, because some of you might be asking, how did it feel being in Italy? Are things really bad? Well, unfortunately, where we went, which is a tourist spot, you can't really tell. And also Milan, in the center of Milan, a lot of tourists as well. So it's bustling and stuff. I guess if I really wanted to see what's going on in Italy, I have to drive to smaller places and look around and talk to people. So, but yeah, things are not good in Italy, in the UK, in the US, in Japan, or in Germany, or in China. So that's that's pointing to more and more troubles ahead, I would say. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And I wish you all a great day and a great weekend. Take care. Bye.